42% of the total return from the S&P 500 index.
What's up YouTube? I have a great video for you today with a little help from my AI assistant, and it's called
How to invest in dividend stocks. Dividend Growth Smart Portfolio on eToro.
Like and subscribe or the dog gets it. Make sure to stick around to the end of the video for the interesting stuff, and I even work out how much dividends profits you will get per company.
What are dividends? Dividends are payments that are made by companies to their shareholders on a regular basis, usually out of profits. A reward for being a part owner of the business. They are usually paid in cash on a semi-annual or quarterly basis. Not all companies pay dividends. Generally speaking, those that pay dividends are well-established companies with dependable profits. Startups and other high-growth companies, such as technology companies, often prefer to reinvest their profits instead of paying dividends to investors in order to generate further growth. Why dividends are important. Dividends are often overlooked by investors, particularly in bull markets when share prices are rising. However, they should not be ignored as research shows that in the long run, dividends tend to make up a substantial proportion of total stock market returns. For example, a recent study by Ned Davis Research concluded that between 1930 and 2018, 42% of the total return from the S&P 500 index was actually derived from the payment and reinvestment of dividends. Investment objective of the Dividend Growth Copy Portfolio, dividend income stocks. When looking at a large, successful company's chart, investors often check for percentage growth in stock price. However, long-term investors will also look at regular dividend payouts as a means of generating a steady income. Dividend investing is a powerful investment strategy that has the potential to provide investors with two sources of return: capital gains and regular dividend payments. To give investors who suit the dividend-seeking profile a ready-made solution, eToro has created the Dividend Growth Smart Portfolio. This investment strategy focuses on mature companies that have a track record of at least 20 years of consecutive growing dividend payouts. After creating a pool of such companies, the portfolio is further optimized using the following criteria. Market cap, looking for solid companies. Beta, low market volatility. 5-year dividend growth average, looking at consistency over the medium term. Previous year dividend yield, short-term dividend performance. What are the benefits of investing in the Dividend Growth Smart Portfolio? 1. You are seeking exposure to well-established companies with a solid dividend track record. 2. You are seeking the potential for two sources of return: capital gains and regular dividend payments. 3. You seek balanced exposure to an array of companies representing various sectors. 4. You are seeking to implement income-oriented investments as part of your portfolio. What are smart portfolios? Smart portfolios, formerly known as copy portfolios, are curated collections that let eToro clients instantly diversify their holdings by investing in arrays of assets and traders with a click. Smart portfolios are designed to help investors take advantage of market opportunities and focus on the strategies they care about most, saving time in the process. Smart portfolios are created with a long-term strategy in mind, so they can be considered suitable for investors wanting a more passive approach.
Use my partner link in the description and let's grow this channel. It supports my work for free, and remember, no good deed goes unrewarded. Thank you.
The minimum amount required to invest in the Dividend Growth Smart Portfolio is $500. Can you remove funds from a smart portfolio? You can close the smart portfolio completely to return funds to your available balance. It is not possible to close individual positions within the smart portfolio. Smart portfolio fees. There are no management fees associated with investing in or closing smart portfolios. However, the underlying financial transactions initiated by a smart portfolio incur eToro's spread fees as per normal trading.
Okay, guys, now for the interesting stuff. Now, the dividend growth smart portfolio is great for beginners looking to invest in dividend stocks, but don't have the time or knowledge to manage this portfolio. Now, this portfolio has 40 different stocks in it, okay? And you'll not only be getting paid the dividends, but you'll also be getting paid the capital gains. So how much the stock price rises over time. Now, it's a long-term strategy, and you can see in this portfolio, it's all about big household names. Most of them are, everyone will know, IBM, Chevron, Pepsi, McDonald's, Coca-Cola, Johnson and Johnson. These companies are going nowhere. And I'm not surprised that the risk score is really low on this portfolio. Okay, you can see here average risk score of 4 down to 3, 4, 3, 4. And interestingly enough, there's 3,884 investors at the moment, but you can see there's a large spike over the previous 7 days of 257 new investors. With the market being so volatile at the moment, I think people are putting their money into safer bets like these companies. Okay, now there's a lot to look at in this portfolio. Okay, so you can see here, I just look at its performance this year is 3.58%. Now, this is the performance of the capital gains. So how much it has risen in stock price. Last year was 19.07%, which is decent. Now, 2020, it was minus 0.83%, but that's still not much of a loss there. Now, it only started in 2020, and you can see this star between this on the other 2019. So this is an estimate of what it would have made if it had been released during that year. So 2019, if it had been available that year, it would have made 23.7 now. 79, sorry. So interestingly enough, you have a big year, good profit, small loss, big profit, small loss. The way things are going this year, it's anyone's guess how the market's going to go. But we'll see how the war in Ukraine is going to go and things like that with inflation, etc., and see maybe if the market is going to recover a bit more. But guys, remember when you're copying other people and you're investing in stocks, this is the time to invest when the market is down and when you're copying popular investors too. I see a lot of people giving out that they copied popular investors in the middle of last year when the stock market was at the highest price. Now it has dropped way down, it has had the correction and kind of a pullback, and they're giving out why is their portfolio down and losing money. But you got to be smart too. So if you've invested in this, like last year, there's nothing you can do. But then the stock prices have gone up. But when the market goes down, add in funds. Okay. So as I said earlier on, to add the minimum to open a position is $500 in this. Okay. But you can add funds at any time. You can add funds like 1,000. And you can update that, and that'll add in funds to your portfolio, your investments. When the market is down, that's when you want to be adding into these copy trading, any of the copy trading features. Now, looking at profits from the dividends, okay? So the annual dividend profits from the top 6 stocks. So if you come to portfolio, you can see that it's broken down evenly into all of the stocks. Okay, so it's all big stocks, dividend stocks. There is no other ETFs or CFDs in this portfolio, which I like. And you can see here, the first one here is 3.3% of the total portfolio. Okay, so it's Lockheed Martin Corporation. So this is a global security and aerospace company primarily engaged in research, design, development, manufacture of advanced technology systems, okay, in arms and defense. And so the war in Ukraine at the moment, this stock price, I'm sure, has gone up in price over the last 3 months or a few months. So if let's look at here for the past, let's put it at 1 day here. So you can see here it dropped last year. It's down there in November, and it's a way up now because of the war in Ukraine and weapons, etc. I'm not a big fan of investing in these kind of companies, but what can you do? So that is one of the biggest dividend growths there. Now, if we look, I've worked out here. So Lockheed Martin. So you're investing 3.3%, okay, of your total portfolio. And I worked out if you invested 1,000 for 1 year in this copy portfolio or smart portfolio, and these are the rates from the 17th of April 2022, which is today. So you would make on that 1,000 invested, you would have 3.3% of your 1,000, so it's $33.30. You would make a profit of 77 cents, but you'd be taxed 23 cents on that, and I'll go through that now in a moment. So your net profit per $1,000 invested would be 54 cents, and the net profit on 10,000 would be $5.40. So you can see here, guys, really long-term investment is about the amount that you have put in. The bigger the amount, the more you're going to gain, obviously. But this is only from your dividends, but you'll also be getting the profits of your capital gain, of how much the stock price has gone up in price. But there's something really important here. Please note, the dividends are held in the smart portfolio till the end of the year. Okay, so your dividends are held in the smart portfolio. Usually, when you invest in stocks, they're automatically sent to your available balance. But in copy portfolios or smart portfolios, they're held within the accounts, and then this smart portfolio calculates, it saves up all your dividends, and then at the end of the year it reinvests them after it rebalances the portfolio. So what does rebalancing mean? So eToro rebalances these smart portfolios, okay, yearly, or at their discretion, but usually yearly. You can see on this one, the last time that this was, if you come here to history, you can see when it was rebalanced last. So you come into history and you go like 6 months here, and you can see it was rebalanced on the 6th of the 4th, so the 6th of January of this year. So they sold off all the positions, and then they rebalanced this compared to how the market cap is. As I said, how to calculate the dividends is through the market cap, the better rating, and the 5-year average dividend yield and short-term dividend yield. Okay, so your dividends are reinvested. Okay, now the only way that you can get your dividends out of this portfolio is by closing the position. Okay, so if you come into dividend growth, and you can't close them individually, you can just close the whole investment. So you'd have to click on close investment, stop investing, and then it'll sell off all the stocks, and then your dividends will go to your available balance. But that's not a problem because this is a long-term strategy. But there's one other key thing I have to mention. So there's also 30% tax automatically charged on the US stocks, sorry. Even if you live in the UK or Europe or Ireland, where a discounted rate of 15% should apply in the UK. Okay, I think it's similar for Ireland and the European Union. So there's 30% tax automatically taken off the US stocks, and eToro does that automatically. Okay, so just remember that, and I've worked that into percentages here. Okay, so let's just look at another stock here. So you just come to the portfolio, you can look through this yourself, and you can just come in here and you view all of the investments. So you can see here I've opened this portfolio at the weekend, so the stock market's not open, so you'll see there that none of the positions have opened. So I'll have to go back to the actual page of the dividend growth portfolio to show you now what I am talking about with the percentages here of each of the stocks. And I've worked out the estimate of the total amount you're going to get from your dividends profits. So come to your portfolio here. I've done the top 6 companies. So IBM is next on the list. So I'll just load this up here. And you can just click on that button there, it'll change it up. But you see here, IBM, so 3% of your total amount that you invest will be invested in IBM. And remember, it's at minus 4.7%. So you're going to be buying it 4.7% lower than what eToro invested in this stock at the start of the year. But remember, with Lockheed Martin Corporation, you're going to be buying it 30% more expensive than what eToro did at the start of the year, because that stock's going to way up. But you can see most of the assets or stocks are around the same. They range from about 2%, no more than 3.3%. And there's 40 different assets in the portfolio. So it's really good, diversified, long term. And I just love some of these big companies. This is what like Warren Buffett would probably advise if he was doing the smart portfolio investing. But okay, so you can see here that IBM is 3.3% of their total portfolio. So if you invested 1,000, 3.3% of 1,000, so you'd be investing $30.30 into IBM. You would have a yearly dividend profit of 157, but you'd have the 30% tax because it's an American company, so that'd be 0.47, and then you'd have a net profit of $1.1, so $1.10 on $1,000, a net profit of $11 on 10K. So you'll be able to see, like on the individual stock page, how much dividend profit you're going to get paid. It's very easy to see here. If you come to the stats page here, so I'm just on IBM there, it's currently at $126.56. So here's the dividend yield. So for every stock you buy at $126.56, you're going to get $6.56 a dividend yield per year. So that's 5.18% of the current price. And that's what you're going to get. And you can see the beta ratio here. This is kind of the volatility risk score of the stock, etc. You can see the market cap here. Lots of great information there. So that's how I worked it out here. So you can see a lot of these stocks are American companies. So if we look at some from Chevron, so you invested 3.01% of the $1,033. So out of $1,000 invested in this smart portfolio, you're going to get 95 cents per year. You're going to be taxed 29 cents. So the net profit is 66 cents. And then on an investment of 10K, the net profit would be $6.60, but that's extra again on the profits of how much the stock price has risen. So here, guys, if you invested 100,000, it's going to be $66. So you can work it out like that. So you can see all of these are really American companies here. You have Lowe's, they're a hardware home improvement store in America. Pepsi, everyone knows Pepsi, and they own lots of other brands there too. So Lowe's, the net profit of the investment of the $27 of every 1,000 that you invest will be 31 cents. That's $3.10 on each 1,000 or 10,000 you invest, sorry. And PepsiCo is net profit of 46 cents. Now, so as you can see here, I've worked out the total profits of the 6 above stocks. So 6 stocks make up 17.68% of the total portfolio. So your dividend profit is going to be $4.96 on each 1,000 that you invest per year. The tax is going to be $149, so your net profit is going to be $3.47 per $1,000 and 37.70 on each 10K. Now that's from just them 6 stocks. So what I did was, because this is 17%, I estimated on this 6 stocks what 100% would be. Now it's going to be different because it's going to be different rates for different stocks. It's just an estimation here. So estimated of 100% of the portfolio using the figures below would mean for every 1,000 you get a net profit after tax of $19.63 paid in dividends profit. And then if for every 10K, you get $196.30. And now for every 100K, you get 1,960. Thanks for watching, guys. Remember, if you have any questions, leave them in the comment section or just comment anything at all. It can be a hello, anything, because it supports my work. Because the more comments and interactions, the better it is for Google to push my videos out to other people. Okay, peace and love. See you next time. Bye.